Most retail investors are asking the wrong question. They keep saying, if the Bitcoin ETFs are live, if institutions are here, if Wall Street finally has access, then why hasn't Bitcoin absolutely exploded? And that sounds like a smart question, but it's actually built on a bad assumption because ETF access is not the same thing as full institutional demand. Infrastructure is not the same thing as capital deployment, and exposure is not the same thing as urgency. So in this video, I want to show you why Bitcoin's price may not be weak at all. It may just be delayed. Here's the core idea. The market is acting like the institutional Bitcoin story is already fully priced in. I don't think it is. I think what we're watching right now is the early stage of a transition. The rails are being built. The wrappers exist. The compliance barriers are coming down. The language around Bitcoin has changed, but the actual size of the institutional bid that most people imagine, that may still be much smaller than the headlines make it sound. And that matters because if the market is pricing Bitcoin like the big money is already fully in, when in reality, the big money is still moving through approvals, mandates, internal risk models, and staggered allocation processes, then the market is early, not late. That's the real setup. This is the first thing most people miss. When an ETF launches, retail hears one message. Institutions can buy now. True, but can buy and have fully bought are not even close to the same thing. Institutional capital does not move like retail capital. It does not see a headline and smash the buy button. It moves through committees. It moves through mandates. It moves through risk review. It moves through allocation caps. It moves through custody standards, internal modeling, counterparty review, and client suitability filters. That means the approval of access is only step one. It's like opening the gate to a stadium and assuming every seat is instantly filled. No, the doors open first, then people move, then capital rotates, then conviction builds, then position sizes increase. So when people say, why hasn't Bitcoin exploded if institutions are here? My answer is simple, because access showed up before full participation. The market had a fantasy. It believed ETF approval would create immediate vertical repricing. Like one switch gets flipped and suddenly trillions of dollars rush straight into Bitcoin. That was never realistic. Institutional adoption happens in layers. First, you get legal access. Then you get policy comfort. Then you get internal education. Then you get small allocations. Then you get performance benchmarking. Then you get social proof inside the capital stack. Then you get larger allocations. That sequence takes time. And while that process is unfolding, price can look strangely underwhelming to people who expected fireworks on day one. But delayed does not mean denied. It just means the market expected a tidal wave in the first 5 minutes, when what actually happens is pressure builds underneath the surface. And once that pressure becomes visible, the move usually looks obvious in hindsight. This is where the conversation gets more serious. Bitcoin has two different narratives competing at the same time. Narrative number one is headline demand. That's the stuff people see on social media. ETF flows, corporate treasury headlines, big names talking about Bitcoin on television, macro fear, currency debasement, sovereign debt stress. Narrative number two is actual market demand strong enough to overwhelm available sell pressure. Those are not the same thing. A bullish headline environment can exist at the exact same time that the market is still digesting distribution, hedging, profit-taking, minor supply, and old cycle overhang. So you can have a structurally bullish Bitcoin story and still have price move slower than retail expects. Why? Because markets don't move on excitement alone. They move when real buying pressure starts beating real selling pressure on a sustained basis. That's the game. Now let's go deeper into the ETF piece, because this is where a lot of the confusion starts. The ETF story is massive, no question, but many people hear ETF and assume that means a perfectly clean pipeline from institutional capital straight into unstoppable Bitcoin price appreciation. That's too simplistic. Some institutions move slowly. Some test small exposure first. Some hedge. Some rebalance. Some wait for volatility compression. Some need multiple quarters of performance data before increasing position size. And some are not trying to become Bitcoin believers. They are trying to gain a measured, portfolio acceptable exposure to a new asset category. That's a completely different mindset. So yes, the ETF matters a lot, but the ETF is not the climax of the story. It's the beginning of the distribution mechanism. That's the part retail keeps missing. The road is open. That does not mean the full convoy has arrived. Now let's talk about the other side of the equation, because even if demand is improving, price won't respond the way people expect if the market is still absorbing supply. And this is where the Bitcoin story becomes more nuanced. You have long-term holders taking profit in phases. You have miners managing cash flow realities. You have old cycle participants distributing into strength. You have macro uncertainty affecting how aggressively fresh capital steps in. And you have a market still trying to decide whether Bitcoin is in pure breakout mode or still in transition. So the bullish thesis can be right while the timing looks messy. That's normal. A maturing asset does not move in a straight line just because the long-term case is strong. It has to rotate ownership. It has to clear overhead supply. It has to shift coins from impatient hands to stronger hands. And it has to do all of that while the public is screaming, "Why isn't it moving faster?" Because the market is doing the work first, then the obvious move comes later. This is the reframe. The real question is not, why isn't Bitcoin mooning already? The real question is, how much institutional demand is still not fully deployed? That is a much more dangerous question, because if the answer is a lot, then the current market may still be underestimating the second half of this cycle. Think about it this way. If access exists, policy clarity is improving, the asset is becoming easier to own, and Bitcoin is increasingly being viewed through a macro lens instead of a fringe speculation lens, then the issue may not be whether institutional capital wants exposure. The issue may be how long it takes for serious size to move through serious systems. And when that finally accelerates, the market does not hand out polite little price increases. It reprices fast. If you like this kind of breakdown, subscribe, because this channel is not built around hype. It's built around the mechanics underneath the headlines. If you want the retail version of the story, there are plenty of places to get that. If you want the capital flow version of the story, the part most people miss until after the move, you're in the right place. Now let's get into what actually flips Bitcoin from delayed to repriced. There are three things I would watch. First, sustained capital persistence. Not one big week, not one headline, not one emotional spike. I'm talking about repeated, durable demand that keeps showing up even when price is higher than people want. That's when you know allocation behavior is changing. Second, reduced available supply into that demand. Because Bitcoin does not need infinite capital to move. It needs enough real capital to overwhelm the supply that is actually willing to sell at current levels. That distinction matters. And third, a macro backdrop that stops fighting the trade. When liquidity conditions improve, when institutional comfort increases, and when Bitcoin starts looking less like a speculative side bet and more like a serious portfolio component, adoption can speed up dramatically. That's when the lag disappears. That's when price starts catching up to narrative. And that's when people who spent months saying, "Why isn't Bitcoin moving?" suddenly start saying, "I can't believe how fast this is moving." This is the trap. Retail usually waits for emotional confirmation. They want the breakout first. They want the headlines first. They want the consensus first. They want everybody on television to agree first. But by the time the move feels safe, the easy asymmetry is usually gone. That's why this phase matters so much. This is the phase where Bitcoin still feels like a debate, still feels frustrating, still feels slower than it should, still gives people a reason to hesitate. And that hesitation is exactly what creates the opportunity. Because if the institutional bid has not fully hit yet, if the market is still early in converting access into full-scale allocation, then the period of doubt may be the setup, not the failure. This is how repricing works. It confuses people first, then it punishes them for waiting too long. Now zoom out. Bitcoin is not just trading as a crypto asset anymore. It is increasingly being interpreted through bigger lenses. Monetary instability, debt saturation, currency debasement, portfolio diversification, and trust in the traditional financial system itself. That matters because the bigger the frame gets, the bigger the potential capital base becomes. And once Bitcoin is no longer viewed as a niche trade, but as a legitimate macro asset with institutional rails, the demand pool changes completely. That transition does not happen in one clean candle. It happens through stages: confusion, underpricing, rotation, acceptance, acceleration. That is the sequence I think many people are underestimating right now. So here's the bottom line. Bitcoin may not be underperforming. It may be in the exact phase you would expect before a larger institutional repricing. The market opened the door. It did not finish the process. That is the distinction. If the full institutional bid has not fully arrived, if the market is still absorbing supply, if access came before broad deployment, then Bitcoin's current price may not be a verdict. It may be a delay. And delays are dangerous because they create the illusion that nothing is happening, when in reality, the pressure is building underneath the surface. And when Bitcoin finally starts reflecting the size of the capital structure now forming around it, most retail investors will call it sudden. It won't be sudden. It will just be late. So I want your take. Do you think Bitcoin is already pricing in the institutional story? Or do you think the real institutional bid still hasn't fully hit yet? Drop your answer in the comments. And if you want more Bitcoin analysis built around liquidity, capital flows, and market structure, not recycled hype, subscribe, because that's what we do here.